We have with us Ravi Menon, Analyst IT and Technology India at Macquarie, joining in on the show right now. Ravi, hi, morning. So good to have you on the show. Ravi, what really is going on with IT? I mean, soon we'll be tracking the earnings as well. But fundamentally, what's the story on ground? Does AI continue to be a threat? Are companies evolving? Are client additions happening? Are orders flowing in?
I think people are coming around to the view that what we saw during COVID was not just pent-up demand, but there is a big structural change, right? With AI, you can clearly see the driver for that. I think even prior to that, people were starting to move more into modern systems. So there was a big wave of enterprise technology spending that had started. I would think of what we've seen over the last maybe 6 quarters or so as a pause in demand with the sharpest interest rate increases that we've seen in the US, I think probably ever. Right? So IT sort of has capex, and when interest rates go up, capex slows down. So that's what we've seen. And I think hopefully when the first rate cut around the corner, we should start seeing demand pick up. And I think that's what people are anticipating. And I think in anticipation of that move, people have started looking at cutting the underweights on the sector.
Ravi, I want to understand with you about the kind of client spends which are happening in US. A stronger US, what does it mean? Because up till now the data seem to be suggesting it's not, kind of crashing into recession. Things are steadier there. Is it like a leading indicator of how coming quarters for some of these larger Indian companies could be?
The economy has actually been strong even through the last year, but still we've not really seen spending, right? But like you said, because it's not heading to a deep recession, I think we can expect to see the pickup in spending much quicker and probably much sharper. I would think, though, that we'll have to wait for the next calendar year for things to really move up. But I'm confident that we will actually see double-digit growth again for even the large caps by FY26 and FY27. And that's where we differ primarily from consensus, which is still, I think, looking at 6 to 8% out of growth.
Time to buy IT stocks now then?
That's what we think, yes.
But Ravi, is there sort of, a demarcation when it comes to the large cap versus the mid caps in terms of the kind of growth that you're anticipating, entry points as well, or is it sort of a blanket call?
No, so we are very stock selective. So among the large caps, we have 4 outperforms and 2 underperforms. So our pecking order is HCL Tech, followed by TCS, followed by Wipro, and then LTMindtree. LTMindtree, we think there's been some execution challenges post-merger, but once that is sorted out, we think that's a stock that can actually grow the fastest among the large caps. The mid caps, our current only outperform is Persistent Systems. We have a neutral on Coforge and underperform on Emphasis and LTTS. We cover small cap names as well, Birlasoft and Mastech, both of which we rate outperform.
Follow up on the Coforge, the idea which you just spelled out, the acquisition which they did. In fact, many of these companies are operating in such niches that they are having very high growth, much higher than peers. Margin profiles are better, and now these kind of acquisitions as well. Perhaps in the near term, Street did not get it, but the management was very adamant on the benefits it could accrue over the next quarters. How did you see some of these moves?
So actually, Coforge, we downgraded on the acquisition. We were outperformed on that. So I used to help run testing services at CSC. I see testing as a very commoditized service that's going away because independent testing is no longer a growth area. Perhaps for Coforge, they are hoping that they can get some logos through Signity and cross-sell. I think it's a difficult task. I've tried to do this myself. I mean, I think Sudhir is a great executioner, so hopefully we'll see that. But I think with Signity remaining listed, and you know how delisting is difficult in India, and if it remains a listed entity, I think, how do you go to clients and try to get them, Signity's clients, and try to sell them services from Coforge? Then how would that be fair to Signity's minority shareholders? So I think there are some issues like that. I think that's why we are near-term concerned, and that's why we downgraded to a neutral.
Okay, fair enough. What about your outlook in terms of the kind of commentary that you're anticipating from some of these IT companies as the earnings season kickstarts? What do you think is going to be critical to monitor?
I think the sort of deals that are coming out. So we have still seeing mostly cost takeout deals. I think there has been no change to the demand environment, but hopefully the drags are over, and we should start seeing consulting at least start picking up a bit more. Wipro had talked about it last quarter, so I think if they continue to see that, I think that would be really the early signs that demand is starting to pick up.
We sort of missed it when you touched upon something about small cap IT. What is it that you were alluding to?
Oh, no, I was saying that we have two small cap names that we have outperformed. We have Birlasoft and Mastec, both of which we rate outperform.
Average, Ravi, what is it that you are expecting in terms of a constant currency sequential growth on an average from the IT pack?
And this quarter, it's funny because there is a wide dispersion. You have a TCS and Infosys where people are expecting possibly 2% plus growth. We at HCL Tech is clearly guided to minus 2%. We think that Tech Mahindra too will probably see a decline. So even in the large caps, I think the average wouldn't really make sense. Average would probably end up being 0.5% sequential growth. I think though we are mostly seeing sequential growth this quarter. Among the mid caps, I think that would be the case.
So, net, Ravi, should one deduce that IT is not a structural story yet, but a more tactical one right now, given that in the last 1 week alone, Nifty IT has surged up about 6%, and I think 13% in the last 1 month?
Have a 3-year view. I think there is a structural story. If you have a 6-month view, I think we still don't have that. So that's how because we are still not seeing demand pick up materially. And I think now that the interest rate cut that we were hoping for in June is not happening, and the Federal Reserve will probably cut only in September, then it is too late to affect the budgets for this calendar year. So I think only next calendar year we'll start seeing improved budgets and spending.
How do you bucket companies like Tata Technologies, super niches and not in the general, IT spend kind of candidates? Do you have it under coverage?
No, I don't cover it. Engineering services overall, though, we have a view that they, it's a good segment, long runway of growth, but the valuations we think have moved up too much. And like we said, we see a big enterprise refresh in IT services, and we think IT services firms will, in general, grow faster than the engineering services peers of same size and same kind of, I would say, broad-based verticals or client exposures. If you have a high client concentration or a single vertical exposure, perhaps that might be different. But so that's why we have LTTS now at a neutral, at an underperform today, because we think persistent systems trades at a slight premium, but it's growing at twice the pace as LTTS. So then last year LTTS did just about 7% organically. Persistent did closer to 14-15% organically.
So good having you on the show. Thank you so much for taking the time out and speaking with us.
And I appreciate it. Thank you. Thank you for having me.
If you like this video, then like, share and subscribe to ET Now.